Hey guys, welcome to a new episode of Retrospect. Today we're going to talk about major bank stablecoins, DeFi regulation, institutional flow headlines, and much more. So the first story we're going to talk about is Socgen becoming the first major bank to launch a dollar-pegged stablecoin. It looks like that stablecoin is going to be issued on Ethereum and Solana blockchains. Public trading is expected to start in July, and it's going to go by the name of USD CoinVertible. Quite an interesting name, that. And at the moment, there are no other banking related players in that space, and there's definitely a need for well-regulated, robust offering in the crypto and stablecoin space. And the US Congress is poised to pass legislation to create a regulatory framework for stablecoins, and it looks like Bank of America could launch a stablecoin soon, its CEO said earlier this year. And there are some other large banks that are considering issuing a joint stablecoin. Next, last week we spoke about the SEC Roundtable, which happened on the 9th of June, and what happened there is the securities watchdog dug into decentralized finance, and Chairman Paul Atkins promised efforts to ease developers' paths. What do I mean by that? So the SEC is working on a policy to exempt decentralized finance platforms from regulatory barriers, and they contended that software developers building DeFi tools have no business being blamed for how they're used, which is good to see. And Atkins is calling it the potential exemptive relief, an innovation exemption that would let entities under the SEC's jurisdiction bring on-chain products and services to market expeditiously. So that's a major change in tone from the SEC regarding DeFi regulations. The next bit of news we're going to talk about is the crypto funds assets, which hit a record high as investors hedge and diversify. So we saw record highs in May as easing trade tensions lifted risk appetite, and some investors used digital currencies to hedge against market volatility and diversify from their US holdings. So it looks like Morningstar data on 294 crypto funds shows that they attracted $7.05 billion in net inflows last month, the highest since December. And that brings total assets under management to a record of $167 billion. And they're saying that this is the start of crypto becoming a permanent fixture in diversified portfolios. The last bit of news, which is a bit more negative than the others, is that a German financial watchdog has reportedly recorded a record number of crypto-related suspicious activity reports. There's been a jump in 8.2% to 8,711 notifications from banks and financial services companies related to cryptocurrency suspicious activity reports. Most reports related to Bitcoin, followed by Ether, XRP, Tether, and Litecoin. The chief of the financial crime section for the FBI said that between January 2024 and April of this year, the agency has notified more than 5,400 people who had been targeted by cryptocurrency-related fraud, many of whom had no idea they had been targeted. Nonetheless, there is a new eagerness for digital assets in the traditional finance world. And Circle's IPO, which we talked about last week, is proof of that. So guys, which story intrigues you the most this week? Let me know in the comments, and don't forget to like and subscribe for more updates. Bye till next time.